Good evening, good people. This is your girl, Indigo Metellus, here with another day of legacy building. So, if you were not able to catch on with me yesterday regarding the topic of leverage and legacy building, I will encourage you to go ahead to go on to either my YouTube channel, my real estate YouTube channel at Realtor Indigo Metellus, and go ahead and dive into that information regarding leveraging ways that you can leverage your income or leverage money to buy a property in real estate without even digging into your own pocket. So, as we start another new day, another session here in legacy building, I just want to let you know my name is Indigo Metellus and I am a realtor here in North Carolina with Avalon Realty Group. So the purpose of me coming on for the next couple of days, and if you didn't know, I want to go ahead and give you the schedule that I have planned for the remaining days. So July 19th, which was yesterday, I started off with leveraging in the Legacy Building series. It's a 5-day series that I'm bringing to you regarding how you can get a start in creating your real estate portfolio and giving you some tips and some things, some other options on how you can start the legacy building in your own family or in your business. So yesterday we started off with leveraging. Today we're going to talk about debt reduction. Tomorrow we're going to talk about supply and demand. Thursday, tax benefits. And on Friday, we're going to wrap it up with cash flow. But as I stated, I am Indigo Metellus. I am a realtor here in North Carolina, and I am with the fabulous Avalon Realty Group. And today we're going to be talking about debt reduction. So if you didn't tune in, as I already said, if you didn't tune in with getting that information about leveraging, I behoove you to go ahead to my YouTube page, which is Realtor Indigo Metellus, or go onto my Instagram page at Realtor Indigo Metellus, and you can go ahead and catch that knowledge on leveraging to start your real estate portfolio. A lot of times people think that the only way to build their portfolio in real estate may be acquiring a home for themselves and then keeping that property, using that as a rental property, and then buying their next piece of property. But yesterday in leveraging, I talked about how you can get yourself acquainted with a hard money lender, and then also talk to a mortgage lender and talk with them regarding a commercial loan, which you can acquire through your business, and you only need a certain percentage to be qualified for that commercial loan. So check that out from yesterday. But today we are talking about debt reduction. So I want to bring you a couple of tips on the advantages of building wealth in real estate, because this is what this whole series is about. It's creating legacy through real estate to help you expound your real estate portfolio, right? How can you go about buying the things that you want, buying a rental property, buying an Airbnb property, flipping a home if that is your idea on how you can create generational wealth or another form of income for your household other than working a 9-to-5 or becoming a realtor yourself, right? So the advantages of building wealth in real estate: you can easily leverage it to buy. We talked about that yesterday. Then we are talking about the limit amount of real estate, the tax benefits. We're going to get into that later on this week. Creating cash flow. We're going to also talk about that. Appreciating the potential of buying real estate, turning it into a rental property, turning it into something that can bring cash flow into your household. Airbnb is one of the most popular things that people are talking about and discussing right now as we're gearing up to how you can build your real estate portfolio. And then today we're going to talk about debt reduction in the part of inflation. So what is inflation? What is debt reduction? Inflation is the continued rise in the general prices, the price level, usually attributed to increase in the value of money and credit. So as we're seeing right now in this seller market, and if you're not aware of it, there is a seller's market right now. What does that mean? It means that there are a plethora of buyers that are able, willing, and ready to buy properties now, right? But there isn't enough inventory. Okay. So what's a seller's market? The sellers have the upper hand. Appraisals are driving up the prices of neighborhoods that traditionally in the past have not sold for what they are selling for, and it's creating a buying frenzy. So therefore it is inflating the prices of home, it's inflating real estate. So an issue that we might potentially have after the pandemic calms down and it flips back to a buyer's market, and I was discussing this with one of my preferred lenders, and he was telling me that the issue that he's seeing us go forward is that now that homes have appreciated higher than the normal, because homes are going so fast, buyers are willing to pay the increase in the prices, or if it doesn't appraise for that amount, they're willing to come out of pocket and pay that increase just so they can get that home. Because one, they are really tired of losing the offers that they are putting out. So they're willing, they're ready to play. They're putting more money in their due diligence. They're putting more money in their earnest money, and they are putting more money and the money down to acquire that property. So now we're in a position where the market has become inflated due to the buyers doing what they got to do to get the homes that they want, and for appraisals coming back for homes that have now been marked up where they usually last year, the year before, would have been bought for cheaper. Now the goods have been inflated. All right. So I gave you a little bit of inflation. So now we're going to talk about, okay. So as we're going through and we're seeing that this market is starting to go up, the value of properties are starting to go up. We have a limit on supply and demand. We're going to get more into that supply and demand later on in the week. But how can we get in on that action, or how does that work for an investor that wants to get into this market today? How can you, buy a property or start your real estate property or portfolio? So yesterday we talked about leveraging. I talked about a thing called a commercial loan that you can acquire if you have a business license or a business. If you have a business and you want to go ahead and acquire an investment property through your business, then what you need is a commercial loan, right? You go ahead and get the commercial loan. You put down 20% of the loan amount that you're trying to acquire. And then you also will need 6 months worth of money saved up in your reserve. So that way you can acquire and show that if I get this property, how can I pay for this property in the meantime while I'm getting it ready to go to market. So as prices are inflating, these are the things that you need to keep in mind as you are getting ready to gear up to buy these properties. You need to know what area you're buying your homes in, the community, the division, the subdivisions, the comps. Speaking with a realtor like myself, I can run the comps for you on the property that you're interested in acquiring, and that will help you to understand the inflation of how much you can inflate on the listing price. How much is this house worth? So that way, the value of increase of the money and the credit will make it an available good and service, okay? So there are many reasons why inflation happens. Right now, we're seeing in the market, I already discussed how buyers are demanding to get the homes that they want. They're willing to play. So they are bringing cash to the table to get the property that they want. They're upflating due diligence. They're upflating earnest money. They are able to, if the home doesn't appraise for the amount that the seller has the house listed for, buyers are willing to add that extra money to get that property. So you're asking, is it a good time to get into this market now? It is a great time to get in this market, especially if you're a seller, especially if you're an investor and you are willing to do the work, do the research, make sure whatever property that you're going to acquire or that you want, or the area that you want to buy the home, you do your research. Understand the comps. If you don't know how to run your comps, get a realtor to run those comps for you. Being able to get this report so that way you know the cost of the price of goods and services, that they will rise over time. So right now in real estate, prices are rising. Okay, so they're continuing to rise. They're continuing to inflate. So debt, sorry, I just got a little sidetracked. So I'm like, what happened? So as far as real estate, we're seeing that the U.S. homes, that the prices are raising, the similar rates are going down. So if you're a real estate investor and you expect the trend, you see the trend over the last 50 years, definitely do your research. You know, if you're going to acquire a loan, hit up a hard money lender or go ahead and go after the commercial loan that you can go and get through your business. You need to make sure that you are analyzing the area that you potentially want to buy a home. This is another way of income that you can generate through your household, through building your legacy, by building up your legacy. Then you have inflation that is affected by cash flow. Say that you're going to acquire a property and this property is going to be your rental property. When you're acquiring that property, if you know automatically that you're going to borrow this money, you have 6 months worth of reserves saved up to pay the mortgage. Now you need to know how much, if I'm going to buy this home and I'm going to make this a rental property, what are the numbers? What can this neighborhood rent for? You start off by doing your research. You find out what other homes in that neighborhood is renting for whatever. If you're buying a 3-bedroom house, two bath, one car garage, then you need to know what a 3-bedroom, 2-bath, 1-car garage is renting in the neighborhood that you are desiring to buy a home in. Then after you do the math, you find out what your mortgage would potentially be. If it's going to be $1,000, say that you want to raise up the rent, inflate the rent to $500. That will cover the mortgage, that will cover the home warranty, and any other miscellaneous things such as property management. If you are going to get someone to manage your property, so that way you can stay out of the business, but still have someone maintaining the everyday moderation of your home. So you need to include these costs in the price of renting out the property. So when you're going to acquire a property, you need to know, like I said, do your research of the neighborhood, do your research of what homes are being rented, how much they are being rented in that area, how much would need to be allocated towards the mortgage, property taxes, towards home warranty, home insurance. These are all things that are tied into a mortgage if you are not aware of this. And you need to know if you're going to put your property in the hands of a property management company and how much do they charge and what services do they add. Do they have services such as every time a tenant moves out, we'll keep some of their deposit and we'll utilize that deposit. Know what those deposit rights are. Know what those tenants' rights are as you are a landlord or using a property management company. These are all the things that you need to also allocate in the cost of the rent that you're going to charge, that can inflate the neighborhood price, that can inflate the cash flow for you to be able to have that debt reduction when you are acquiring a property. So yesterday we talked about leverage. So one of the best tools to create leveraging is a great tool to create wealth if it's used properly, right? So we talked about how when you use leverage, you can utilize someone else's money to acquire the things that you want to acquire, right? So when we're doing debt reduction, why is having a mortgage one of the most important benefits of inflation? So in the US, 64% of people own their own home, and over 70% of them had a mortgage, okay? Outside of the residential real estate, most of the industry and commercial properties is leveraged with a mortgage as well, okay? The only real estate which is not highly leveraged is raw land, and that is because it's not leveraged because banks do not lend on land, which makes an interesting asset, and deflating becomes the norm. So inflation causes the price of goods and services to rise over time. However, certain things do not rise to accommodate the inflation force: cash and fixed debt. Mortgages are fixed debt. So while the value of your property is increasing, debt stays the same. At the start of your mortgage, the debt was 80%, the value of the property. After 30 years, it's only 33% of the value of the property. This is what is called debt reduction via inflation. So in the beginning, when you acquire the property, it had 80% of value. Over time, the value of that property started to decrease. So I know a lot of times people are saying, hey, I have equity in my home. I have equity in my home. That might not necessarily be, depending on what the home is valued as. Not because you have memories in the home. That does not cause the house to have the value. It also is depend on the comps of that neighborhood. What are the prices of the homes being sold? So if you bought that same home, for example, I had a client, they bought a home, and I know a person, they bought a home, and 2 years ago, right? 2 years ago, they purchased the home for 110. Now in this market, they were able to sell their house for 140, right? So it wasn't the fact that they did upgrades. Yes, they did update the roof, put a brand new roof on it, but it wasn't the roof that gave the value of the home. What created the value of the home is other homes being sold in that area, what other homes had been appraised for, and what other homes had sold. So you think about it. You buy a home at 80%, that's the debt that you incurred when you get that mortgage. 30 years later, your debt has decreased. It decreased because over time, you're consistently paying your payments. You're paying down the mortgage. You're paying down the debt. You're increasing potentially the equity into the home that you can pull out eventually. If the market at that time, or your home at that time, has reached a place where it is valuable, okay? So instead of inflation causing prices to raise every year, it causes the value of your cash and fixed debt to decline. So sometimes as we get mortgages, our mortgages can be at a fixed rate. So as we're paying our mortgages over time, this debt that we have incurred, if you started at the beginning of your mortgage at $110,000 and over 30 years, now you have paid it down, you only have $2,000, you have reduced your debt. So a good thing about buying real estate, especially in this market that I said, is a leveraging. How can I leverage and get into this game? How can I get into this game and buy? And instead of incurring a mortgage, how can I get into this market and be able to get a piece of this value that's going on? And so Sorry, good people. I'm just trying to make sure that I'm reading over my notes and that I'm highlighting all the things that I wanted to bring forth today as we are talking about debt reduction. I just want to make sure that I'm hitting all my highlighted parts so that way you are well informed about the reduction of debt. And really what reduction of debt is, in the beginning over time, you are at your highest, especially when you're a homeowner. You have all this debt regarding the home that you have acquired because now you have a mortgage. And over the life of that mortgage, you are paying it down at a fixed rate. And I talked about how you can leverage in this market by using inflation. So we also have an inflated market right now with the value of homes that are going up in value due to the appraisals and due to buyers buying properties. So now you have to just think for yourself, what is the best situation for you? Do you get into this market now where the rising inflation can be a good and bad thing for real estate, which is offering potential opportunities for investors? And or do you, as a person that's ready to buy a home, just wait until the market simmers just down a little bit more so that way you can get into this game and play and get the home that you desire? So I hope that you found some of this information valuable and insightful and able to use it as you move forward, deciding on if you're buying real estate as a homeowner, home ownership, which is very important as well as you're building your legacy, or are you going to get into real estate as an investor and use this market right now that is being inflated, which is a good thing at this present moment, to be able to know that if you acquire a home, whether it's rental, but really as a flipper, it is a real great investment for an investor to get into this market right now, especially where it's a seller's market and sellers have the upper hand because there is a low amount of inventory on market. So with all of that said, I hope that you thoroughly enjoyed this. I hope that you took some pieces that will help you stay informed of this market, help you get far where you want to go, and help you build the legacy that you are interested in building for yourself and your family. Once again, my name is Indigo Metellus. I am a realtor here in North Carolina, and I'm with Avalon Realty Group. And I hope that you have a great and successful day. Make sure you like and comment and follow me on all social media platforms at REALTOR Indigo Metellus. And if you have any questions or concerns, please feel free to give me an email at indigometellus@gmail.com.